All right, good afternoon or good evening. Today is Wednesday, January 24th, 2024, and we are in third trading day of this week. Today we have a PMI data release, and it above expectation. Basically, the economy activities pick it up from the supply side, from the manufacturer side. And I think next week or somehow next week we'll have a CPI, right? And tomorrow we're gonna have a high or medium impact news GDP data release, which is we're gonna see how the economy gonna perform. And we are in a week 4 of January. And next week, kind of week 5, which is mixed between January and February. So it's very interesting when you have a week that overlap between 2 months. All right. Now look at the price action today. It's very, very interesting and have a big move. I mean, if we catch this move, it's a huge move right there. This is the level. Let's see what's the level of 484, 85. $84, 85. It's that. Okay, right here. Here's double. So basically, this is the opening gap of this week, right? This week we start right here. Tuesday, I think. Yeah, let's look at the $85. Yeah, 84, 85. I think that's the gap start on yesterday. It start on 23rd. So it's yesterday. But this level we mark as a 4 breakout on Monday. Yeah, it's Monday, right? 22nd. Yeah, this Monday. So this level is the 4 breakout. So basically the 484, 85 is the breakout level start on Monday. It formed that, and also it overlap with the gap up on Tuesday. Yeah, on Tuesday, the gap up. Is it on Tuesday? No, not on Tuesday. I think it's on Wednesday. Hold on. Let's see. Let hide the pre-market so we have a roughly idea. Yes, so it's basically here, right? You have a gap up on Monday, and this is a 4 breakout level. Yes, for on Monday, and that's collapse. That is coincident with the coincident with the gap up level today. It took a little bit, right? I think about 70 cents above. So the gap for today right there, right, is 11, right? This one is 85, so it's about 30 cents above that. So it's one of the key level right there. So technically the gap for today, it got filled. So whoever short have a wonderful trade right there. So this level is the gap level for today. This is the full breakout for Monday. So to make sure that we are aware of the level that we are dealing with or working with right there. All right. Now let's show it. So today the whole idea is that gap up and then yeah, let's go with that idea. Right, gap up and what? You have some kind of pattern to work with right now, right here. So you have a gap up and then it reverse on the PM section, which is 13 hour right here. Exactly 13 hour. It's how accurate the algo run. You see that? Gap up, and today the gap up is $2.97, and it's compared with the one standard deviation of the last 200 day or 200 periods or candle bar. It is above one. Is that mean the huge gap right there? However, there's no follow-up. It's just gap up and then reverse. So that's an idea right there. And we did take the screenshot, and let's see what we have in mind. We can go through. So we name this setup as gap up and reverse at PM, right? 13 hour ish right there. So we have all the signature and hallmark of a high quality setup right here. So basically we have first we have a gap up, in this case $2.95, and we name this as gap up reverse at PM section. And then you have the breakout level right here. This is the breakout level. It formed at this candle, right, which is at 12:30. You see right here the time at 12:30 right there. And then you have auto block, which is a candle that close above the breakout level. That will induce, or it will attract all the people who want, all the bull. It's basically a bull trap right there. Trap or the bull, right? The bull want to go long, or anyone who go long, they get sucked into this trap right here. So whoever trade a breakout, right? Oh, they're gonna put right here, it above this level, they're gonna buy, right? They will get trapped right there. So that's no idea. So we have auto block from at 12:50, right? 12:50, and the one of the detail we have to pay attention. It have to be above the DR 0.5 standard deviation, which is this level right there. Both of them, right? You have the breakout level above the DR 0.5 DR level, and then the auto block form above that level. And beautiful that you have another signal for you that you have a doji candle right after the auto block, and it's make a new high. What perfect condition is that? As soon as you just candle form, we put a sell stop right away at the breakout level 488.63, and our target gonna be the DR low, but actually in the final closing it go all the way to all the way to the gap right there. You see it hit the gap 485.11. You see that? That's amazing. It hit the gap. You see that? How accurate the algorithm. So it's right here, the whole thing right here set up the buy sell liquidity, and it ripped all that buy sell liquidity right there. So even though we target at the LO, we only want 16 risk reward ratio like that. But if we target low below that, I mean the risk reward ratio could be crazy high right there. So that's an idea. See that? So that's the idea for gap up and reverse. Of course, the gap up and reverse by itself is a full breakout, right? But it happened in the context of gap up and reverse at which when we name a reverse. That's just generalize the concept. But if in itself is a full breakout, right? Here the full breakout setup. Basically, the full breakout, we identify the breakout level and we wait until it closes above that and put the sell stop in. That's an idea of trade for breakout. It seems like we pick the top or we pick the bottom. That's the reason why we have to be patient. We have to be patient and wait for the confirmation, wait for the market condition that favor our setup. Otherwise, we will fall into a trap called pick the top or pick the bottom, right? That's the whole idea of low risk trade come from, right? If you're wrong very fast and you risk very little. But if you're right, then you have a run. So that's an idea. Yeah, so this one is a full breakout right there at this setup right there. Full breakout, sell stop. Entry exactly at 13 hour. Okay, before that, I think we have a nice setup at the opening, right? Look at this. We need to put this back. We need to put the pre-market candle or data back so we can see. So basically, you see right here is the order block right here. We identify the very key for it is trend hour I to identify the breakout level, right? Or in this case, called resistance level right here. The whole candle right there, right? Resistance or supply, level. It depends on what terminology you use, but the characteristics of the setup is the same. It's just different terminology, right? Right here is breakout level, or you can call it supply, or you can call it resistance. As soon as we identify level, we see the order block, which is the one close above that. That's the whole idea of the ICT concept right there. Then we mark that level. Especially we see that the huge order block, the huge fellow gap right here, right? So we know that it's gonna retest. As you see right here, the retest. So basically right here we put a we either put a sell limit at that level or sell limit at this level, and we put our stop loss just above this order block right here. And it play very nice in here. So we have 4 breakout, right? And also a order block for up retest. So that's set up right there. And the entry is at 9:30 exactly. We did take the screenshot right here, right? At 9:30. So the condition, the market is the gap up, and we bet on the tendency that market will go down to refill the gap. So that's an idea. So with a sell limit at this level, 67 for 87.69, or we can put at this level. right? And we can choose this level on this out block, or we can choose at 4 breakout level. So we have 2 options right there, and we have a very nice 1:4 ratio right there. If we choose our first target right there, but if we let our target run, it will run all the way here, as you can see. So right there, right in the screenshot, we just identify the level, but actually you can put at that level also. So the level of this breakout is more accurate to go with this. So that's an idea. And let's say you go in at this level. I mean, you see we reach very tiny fraction. So this is 17 cents, right? And let's see how much we gain. It's crazy right here. Now we gain all the way to the gap, right? With for 85.11 right there. So it's $3. Yes, so look at that, the huge move. Right here is a favorable gap, but it don't even have enough buyer. So basically we have the gap, favorable gap, but don't even have enough buyer liquidity to push, no, actually, yeah, buy side liquidity in order to go up to retest the favorable gap at all. But if you look right here, it also have auto block and it retests that. The reason why it have, because it don't have, it have little buy side liquidity, so it need to retest to build more, sell side liquidity. That what the reason, right? You don't have much sell side liquidity, right here, the sell side. But right here you have a ton of them right here, from here to here. You have a ton of sell side liquidity, so you don't need to retest them. So that's the logic right there. So here, let measure them, right? So from here to all the way here. So you have about 41 minutes, 92 cents. But from here to here, yeah, you just have, not much at all. You just have not much liquidity. Reason why it had to go back and retest. But if they have a huge liquidity, sell side liquidity, it just keep ripping down. You don't have to go back and trap more liquidity or build up liquidity. It have enough, so it's just pull it out. So that's the whole idea of liquidity, right there, liquidity run right there. So that's the reason why, sometimes we want to wait for the favorable gap retest. We will miss the trade. The reason, because of the so much liquidity right here, it don't need to retest in order to trap more liquidity, build up more liquidity. Yep. So we have to do with the 4 breakout setup. Otherwise we mix the trade. And when we see both the set of collide or overlap, then we know it's the high quality right here in this one, right? You have 4 breakout level and also what the auto block for the gap retest, then you have a high quality right there. But it's very too early for it to go down. That's the reason why you have to aim low right here at that level and get out and wait for the PM section. to take another shot at short position, and you have a heel run, heel wing right here. You see, this scenario is kind of repeat itself, but this pattern have the retest to the auto block. This one you don't have retest. It trying to, but it not go back to this error. But here you see this failure up right here, it retests that. So that's the variation right there. And the commonality, right? You see this. You have auto block, and then you have a doji candle. A beautiful signal for you to short right there. See that doji candle right there? That is so distinctive. It's so distinguished. It's so unique. So next time if we see this setup, we go all in right here without any hesitation. So that's the reason why we need to practice, right? That's the whole idea. It's like you place not you place, but you practice mixed martial art, right? You practice the kick, right? So when you go into a fight, then you know exactly what to do. I mean, the same idea for any sport, right? They practice hour. So when they go to the real game, they know exactly what they can expect and what scenario going to play out, and then what is the game plan. The whole idea is develop a game plan. So if we practice long enough, all of this is become our second nature, and we know how to come up with a game plan to execute this kind of trade. So trading is like playing in sport. We need to practice, be patient, don't jump the gun, give ourselves enough time to learn, to make errors, to improve. We trade very little, start small, and then we scale up. The key thing that we have to give ourselves room to fail, to make mistakes, to make errors, so we can learn, and we accept the mistake as part of the game. Don't take failure, errors as a negative things. You just take it as an opportunity to learn, to improve ourselves. That way we can always reset our mind, always have our mind in a so-called zero state, neutral state, which is less the emotion, detach ourselves from the emotion. Do not let this influence us when we try to trade, because the fear of the emotion, the emotion of fear, greed, it tries to influence us. Especially when we do trading, right? You trade with your own money, the real money on the line. So those two, emotion is very strong. It's always there, but we have to reset our mind and minimize that. So basically, that's the pattern the same, right? You have a 4 breakout and the doji right after the auto block. But this one the retest, but this one there's no retest to the 5 value gap. The reason there's no retest because the huge amount of you count from here, the huge amount of buy side liquidity. Is that buy side? Come down, yes, sell side have to sell back. Right, the buy high and the sell low. So this is the sell side liquidity right here. They had to trap and build sell side liquidity. When it building up, boom, 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 it go down and grab that sell side liquidity. And right here, the sell side liquidity is not enough. That's why it had to make another move up here to build a sell side liquidity, and then boom, it gone down. And right here, the sell side liquidity is no longer there, so it go up to build more. That's the whole idea. So basically, we have another trade setup. very beautifully. It's a long setup. Before we wrap up the review for today, the entry time is 11:45 right there. It's a very short sweep right there. Right. The idea is that this breakout level, right, for 87, 83, right, it break through and it come back, it retests, and this is the where retest. When we watch in the real time, this candle is really down right here. We thought it's gonna, break out, but it's not. That exactly moment that we need to put a buy stop right here, and we put the stop loss right here, which is our risk right here, 33 cents. So we either entry right here or we wait at this 11:45. So we have two entry there, 11:45, the latest entry, or we have let me see, 1 2 3 4 5 6 1 2 3 4 5 6 6 times 5 30. So we have entry at 11:15 or 11:45. That's 1 hour, half an hour later. We either entry right here and stay with the trade, right? Even though it's a little bit scary, right? But if we stay with the trade, just stay with the stop loss, then we'll hit our target. Our target very easy. It's just you're gonna retest you're gonna retest the 0.5 standard deviation for the model right there. That's our target right there, and we have easy 1 to 2 risk-reward ratios, quick and short trade right there. So that's the one step we identify, which is right here, right here. You enter right here, excuses right here. So 45 or 11:15 right here, and this is the the level for our entry there, right? That's how we track down this breakout level. Breakout level very key for us, and I think we're on the way there. We're very good at any level now, and we have to working on the execution, right? Very critical for us execution, because if we don't execute right, then we get panic, we move stop loss or move target, something like that. So, and the execution part is the harder part, and it takes practice. We have to patient with ourselves. That's the deal right there. Okay, so I think we have less than 2 more minutes. We want to take a look at the the 4-hour time frame real quick. Right here we have 4-hour time frame, and today you see it's a huge Dow close candle right here. That signal something right there. Signal it's gonna be this week it's gonna be sell. Normally, you remember, market will top on a good news. Remember that. So last time we bottom right here, right, when we see this LR10, which is the the regression line of the last close of last 10 candle, give us some idea. And this is it's like Bollinger Band right here. So it gives us an idea that when it's crossed right here with the PR switch, give us a key signal to go long. Let's see if we go. I think it's in a good short right here for the 4-hour. Let's look at the dragon. Okay. Yeah, let's do this one and remove this one. Yes, so right here you see that the RL10 is crossed the LR30 right there, and now the phenomenal right there, so it gives you signal to short right there. So we're gonna short tomorrow. That's an idea. So this indicator gives us some some confluent signal right there. All right, that's all we want to say for now. So we're very grateful for the opportunity, and we doing what we love. Success is coming to our way. But for now, have a good, wonderful evening.